Hey, it's Michael Saul, but everybody calls me Tiny, and this video is, well, they didn't sell Rosh Hashanah, so, plus one stock to watch. This is for the week of September 25th, 2017. Yes, I took last week off. I have no idea why. I wound up going out to Detroit for a few days. I guess I was too messed up on the weekend, worrying about the trip. I don't know why. It's a wonderful flight. If anybody has ever flown from the East Coast to Detroit, it's only about an hour in the air. So anyway, I did not update my videos, the video last week, and we hit new all-time highs last week, and then this past week we hit highs again before we started to get a pullback. Now, if you want to receive intra-week updates from me, go to www.attackthemarkets.com, put in your first name and best email address, and hit the Join the List button. Then go to the email you used and look for an email from me with a link in it. You must click that link in order to confirm that it was really you and not one of those pesky robots that goes around the web apparently filling out all these opt-in forms. And you will be on the list and you will receive intra-week updates when I have them. Okay, so the title of this video is, So They Didn't Sell Rosh Hashanah, or, well, they didn't sell Rosh Hashanah, so whatever. The point is, talking about the selling Rosh Hashanah trend. Okay, so there is a trend that if you go back and look over the years, that the market usually underperforms between the period of Rosh Hashanah and Yom Kippur. The trend, the actual complete trend name is Sell Rosh Hashanah, Buy Yom Kippur. Okay, it's a tendency, a trend, whatever you want to call it. And for whatever reason that it happens, a lot of people say, well, it's because people of the Jewish faith don't want to manage their positions during that time, so they just get rid of it. And then, of course, in between Rosh Hashanah and Yom Kippur, based on knowledge that I've had from a long time ago, that's a time where you're just praying for forgiveness, and Yom Kippur, they either write you in the book of life or not. So a lot of people feel that they have more important things to worry about than managing their finances. So that's one of the reasons that people give for why this trend works. Now, if you look, like I said, historically, the trend, it does work. The market has underperformed during that time, but that doesn't mean, same with all seasonal trends, it doesn't mean it has to work every single time. Okay, so there are times where I'm sure the market has outperformed or has at least stayed steady during that time, but it's just something to keep in mind in the background. Now, couple that with the fact that we are extended here in the S&P anyway, and if you've been watching my videos, you know what I've been saying. It's not a short signal, these new highs, but it's definitely a, hey, move your stops up and protect yourself signal. Okay, new highs, a lot of people, they want to buy into the new highs, and yeah, you would have made a couple of bucks here. See if you're trading, we'll go to the SPY here. That's not really corrected, though, as the cash index. So if you would have grabbed this, you could have done a couple of, made maybe a couple of points here, but new highs are a great place to, in my opinion, to watch what happens if they're not coming from a solid long base ahead of the breakout. I like to see what happens at the new highs. Does it come with responsive selling, or does it come with initiative buying? And more often than not, you will see that it will come with responsive selling. As a matter of fact, there was a study done a number of years ago, and I'm going to butcher this, so don't quote it as quote. You should never quote anything I say as quote unquote gospel, but it was a study done, and it showed that buying new highs actually underperformed selling new highs. So I'm not saying every time we hit a new high, sell it, but to me, it's not an auto buy. And right here, it looks like we're starting to consolidate. I would not be surprised if we did pull back, because we're in between Rosh Hashanah and Yom Kippur or not, all right? Regardless of that, even if it looks like we're extending here, we're stretched from the moving averages, so I would be watching here for a pullback to at least the 20 EMA, if not down to the 50-day. Okay, here's the NASDAQ, already at the 50-day moving average. Here's the Dow, starting a pullback. But this isn't selling, right? Oh, well, you had 2 days down, so there's your sell Rosh Hashanah. Yeah, that's not really selling. Okay, it's just a minor pullback there. Here's the Russell. The Russell had been underperforming for a while. It is now the leader. Okay, will this continue, or will this also get a pullback here back to the home base where it's been for now almost a year? I mean, it's definitely tilting to the upside, but really hasn't gone very far. And here's the mid caps. Mid caps are lagging the Russell, but also doing okay. They're just not at their all-time highs. So, like I said, and we'll use the SPY again, I mean, we're consolidating. We could pop out of this, but I think we're more due for a pullback here. I think that pullback is going to be buyable. Okay, I still believe the pullbacks are buyable until further notice, until we see something step up here that says, hey, you know what? This North Korea situation, maybe that'll rattle the market. So far it hasn't, and they're sending out bombs, and I mean, as of now at least, China is acting like, hey, they're condoning what they're doing, but if something like that changes, I get emails all the time, Tiny, you don't really seem to think politics influence the market that much. Well, they really don't. They don't as much as you would think, okay? And I know I'll get more emails about this, but, I mean, look, since President Trump has taken office, there has been swirls of controversy. There's back and forth with North Korea, and so far it has not had any long-term effects here. Any pullbacks have been buyable, and if you would take out the news and just look at the trend of the market, you would say, oh, these are just normal pullbacks. You wouldn't necessarily tie them or lock them into anything that is going on in the world. Now, that doesn't mean it has to continue like that. It absolutely could change. There could be a shock moment for the market. Okay, I'm not saying that all politics are just brushed off. I'm saying up to now, basically, that's what we've been seeing, okay? Now, I've been talking a little bit here, so I want to buzz through these indices. Semiconductors, nice push-up. Sectors, sorry, I always say that, but it's the sectors I'm looking at now. Nice push-up to new highs, now a pullback. Semiconductors look good. Clad tanker looks like it's on its way. We identified this a few weeks ago. Nice push-up to the upside here. Here's NVIDIA. Also, out of its triangle, nice push up to 190. If this pullback resumes, watch for 200 there. Here's Intel. Well, Intel got going a little bit to the upside. It's only a small push here so far, but we did hit a higher high. Let's see where this consolidation leads to. Here's ADI. Excuse me a second. ADI consolidating here. See if it pushes out of this. Hang on 1 second. Let me grab my trend line tool. You can see we could throw some trend lines around here. It's more of a wedge. But remember, a lot of people think, oh, this is bearish. It's a rising wedge. It's not the truth. A wedge is a consolidation pattern. It means it can go either way from here. How about the banks? So the banks, they had been lagging, and we got below the 200-day moving average. And the last video I said is, all right, you know what? It's not a sell signal yet. We have to watch what happens on the reaction. Well, look what happened on the reaction. We remounted the moving averages, and now we're almost back up to where the summer high was. I can't believe it's fall already, by the way. Here's Bank of America. Nice consolidation here. Here's JP Morgan coiling up at the highs. Here's Citigroup coiling up at the highs. Here's Northern Trust consolidating. Here's Zion Bancorp consolidating as well. How about the broker-dealer? So the broker-dealer looks like it's headed for the highs. Here's Goldman right on its 200-day moving average. Here's Morgan headed up for the highs here. How about like a Legg Mason? It's lagging between the 50 and the 200-day moving average. Here is the biotechs. So the biotechs were consolidating. Instead, it kind of crept out. Didn't quite get to the 200-day moving average. I'm sorry, the 20 EMA. That's the red moving average. See what that does. Here's like a Biogen, which came down, hit the 50-day. This looks like a nice pullback here. See if this can go from here, right? Got to wait for confirmation, but a nice reversal on Friday off of the 20 EMA. Definitely something to pay attention to. Here's Gilead with a similar pattern. Boy, this is such a nice move off this 65 level. Big move for Gilead. Okay, let's look at Caterpillar. Wow, just continue to go. John Deere. Okay, so John Deere, we highlighted this a couple of weeks ago. Says we got to watch what happens at the 200-day. What do I always say? The 200-day is a key inflection point. We don't just sit there. We move one way or the other. Look what we did last time we tested the 200-day. All right, so what happened here? We were just shy of the 200. We consolidated, then boom, a nice move up there. Here's Amazon. So Amazon's still lagging after all the hype about Jeff Bezos being the richest guy in the world, and it was like being put on the cover of Sports Illustrated if you're an athlete. Look, I'm sure he's not eating cat food or anything. I'm sure he's doing well, not even though he's not the richest guy in the world anymore. But, I mean, this is not a strong-looking pattern. It's above the 200-day moving average, so it's not necessarily a short, but it is in the spirit of a head and shoulders. So watch this. Here's Apple. Boy, Apple clipped out of this wedge, came back, kissed it goodbye, and then look at this. 150 is a key number, then the 200-day moving average. How about Google, a.k.a. Alphabet? I'm going to keep calling it Google probably, but the real name is Alphabet. Look at this consolidation right here. Let me grab, okay. It must have a horizontal line here, but for some reason I don't. I just use the trend line. Okay, so that's 15 seconds you'll never get back in your life. Okay, so here's the consolidation for Alphabet. How about Netflix? Yeah, Netflix looks like it's on its way to its high. And what about the Facebook? So the Facebook came out of its flag here. Now it's consolidating. Will it get to new highs? You have to wait and see here. How about gold? So gold, okay, this is all my text from a couple of weeks ago, but gold had the Stein and handle pattern. It popped up. Now it's pulling back to where it broke from. This is going to be key. Will it hold here and rotate and go up into the 130s, or was that push just a failure? And look at the gold miners back below 24. My good friend Mike Swanson always talks about gold miners being above 24 before people start getting interested in them, the GDX. Now it's back below 24. So what's that going to do? How about oil? Oil still between its 50 and its 200-day moving average. I still think it's going down to the 2016 lows. I think this is all corrective, and I think eventually it is going to head down that way. And finally, bonds. Okay, so bonds. Oh, look. Oh, they're going. Oh, everybody. Oh, here's the buy signal in bonds. Nah. Back down to the 50-day moving average. More of a consolidation here than a directional trend. Stock to watch this week is Zogenix. Zogenix had a nice sharp push here, right? So went below the 200-day, came up above it, retested it, then a nice push. Now a pullback and a reversal at the 50-day moving average. Let's see if this could get going. First target would be back up to this high at 1650, and then above that, hole number 17, then 1727. Again, I think a pullback is coming here. No, I don't think it's the bear market or the great crash or anything like that. For now, I just think it's going to be a run-of-the-mill pullback that will more than likely lead to another buying opportunity. Questions? Tiny at attackthemarkets.com. Don't forget to join the list if you want to get intra-week updates. I will talk to you either via email or in next week's video. Have a great trading week.